Section 3, Realizing Mastery. Why is chapter 1 and 2 so important? If the foundation is solid, the structure will stand the test of time. If you ever ignore your roots, then I can boldly say you are lost. You can't grow or develop if the foundation isn't set right. That is why I had to take the time to help revisit our common past, which is the basis. Some candlestick patterns. There are a lot of candlestick patterns, from some simple ones to others like the harmonic patterns and thereof, but we would be discussing more of the simpler ones because they are easy to spot and simplicity is very necessary. The whole idea of making you guys exposed to more of the simpler ones is because of it's really easy to spot. You don't want anything that will make you to be cracking your brain in the market. Just go there, you spot your pattern, and you know what to do next. This is a double top pattern, if you can see. This is the first eye, then it came down like a pullback, then it went up, the second eye, then you see this neckline. How do you mark it? It's the pivot that is joining the two ups that has it. Then you can see the way price is breaking down, falling after it. This is a double bottom pattern. The first pullback, the second, then you mark the pivot joining this first and second bottom. That's the pivot. Now you just mark it. That's your trend, your neckline. Then you would watch price go up, it's a bullish pattern. Immediately it happens, double bottom, immediately it happens and you confirm your entry. There's high probability of price going upwards, you get, because it's a bullish pattern. The double top we previously talked about is a bearish pattern. That means whenever you see it, you're expecting if I see this pattern, there's more probability of the price going downwards, and in the case of the double bottom, there's more probability of the price going upward. This is a cup and handle pattern. This pattern, I don't really like it because the formation time is forever. It takes a lot of time. But back then, during my early days in the Forex markets, I've seen some traders that drew this pattern out. They'll be oh, I saw cup and handle, I know what's going to happen next and stuff like that. This is also very solid, but the formation time is much. That's why you'll see a curve bull, then you will now see a flag. This is a bullish pattern now. This is the descending triangle. This is a bearish pattern. This is a trend line. Then this is a support, at least two supports to form the straight line. Then the trend line must touch at least two of the high pivot points. To confirm the triangle. This is a descending triangle. You can write all these things down, draw it so that you would have this picture of it in your head. So when you open the chart to look at things, you would easily identify them. This is the ascending triangle. a replica of what, like an inverse replica of what we just talked about. See, the trend line this time is bullish trend line, like expecting a bounce up. Then you would now see like a resistance at the top over here. Confirm your triangle. This is an ascending triangle. It's a bullish pattern also. Then this is a pennant, just like two trend lines forming a triangle. You get, and this one usually happens, like I have noticed this one like more on uptrend and stuff like that. I've noticed something like this. This is a pattern also. Write it down so you don't get to forget it. Then this is an ascending wedge. Ascending wedge. It looks like the pennant pattern, the one we just talked about, but this one most times is more bigger, and it's a combination of two trend lines also. This is it. So once something like this forms, you expect that there's like high probability of it breaking, as you can see. So this is a descending wedge, inverse of what we just talked about. They look like just V, like V. Once you see something like this, you would expect that, oh, there's bullish tendency. I would like, as I'm showing you all these patterns, you try to like identify the one that you believe would give you like less stress to identify. Then you write it down, you draw the way it's meant to look like, would proceed. One will proceed, you would know the reason why I told you to do it. So, what makes a strategy? From personal experience, I would say rules makes up a good strategy. And those rules will be created based on certain questions I call the 8 orders. These are like rules you would have to like tick before you can come up with the fact that, oh, I placed the trade. A good strategy would help your psychology better. The first one of the question, what type of analysis do you want to use? This just want to like get the concept you want to use to view the market. Do you want to view it in a technical manner or fundamental manner or news-based manner? Maybe if I'm to create a strategy now, I'll bring out all these questions and just start answering them on a piece of paper. Then number 2, what type of trading style do you want to practice? There are a lot of trading styles like scalping, intraday, day trading, position trading, swing trading. There are a lot of them. I'm a day trader, so I don't have like any other trading style. Then question number 3, what is the parameter for which your initial setup will be validated? I can just pick one of those patterns we talked about. I can be like, oh, for me, the easiest one for me to spot is the double top and double bottom. I can pick it that maybe that's my initial setup validator. Like immediately I see like a double top, yes, that means it's time for me to like look at the chart, like focus more on the chart and break it down. Then question number 4, what is the parameter for which your entry can be validated? You know, after you see your setup, you would not just enter like that. It's not wise, like it's not smart. You would want to get another confirmation that, oh, 2 patterns are saying the same thing. The ball now is in your court. You would have this much more better confidence. So it's better you wait for like your entry validator. You get? If you remember in section 1, we talked about like some patterns also. So I can just say, oh, my entry validator is an engulfing, for example. You get engulfing, bullish engulfing and bearish engulfing. I can use that as my entry validator. Then question number 5, what invalidates an entry? There's an error there. What exactly can make my entry invalid? Maybe if I don't see like an engulfing in my point of interest, maybe after I'm done marking my double top, I don't see an engulfing, my entry has been invalidated. Question number 6, what is your stop loss and take profit position? Me, I have like a fixed stop loss I always work with whenever I want to like change a strategy or something. That's 10 pips. I don't risk more than 10 pips, and that 10 pips is equivalent to 1% of my account. Then what's your take profit positioning? If I'm testing a new strategy, I first start with 30 pips. Then after I'm done taking record of that 30 pips, then I'll back test again using 40 pips to see the like improvement. If the difference is not really that much, I'll just up it to 40 pips, then I'll back test with 50 pips to see if, until I see that distance in profit margin, that's when I'll be like, oh, it's okay, I don't have to like top it anymore. But like the current strategy I use is 10, I risk 10 pips, then I aim for 50 pips and I get paid. Question number 7, what's your daily trading time? The market runs 24/7. That does not mean that you are always like expected to be in the market. Me personally, my daily trading time is 8 a.m. to 4 p.m. Nigeria time. And what does that mean? It means that from 8 o'clock, that's when I have an alarm for it. I'll be like check the charts to like know if any of your setup validator has arrived and stuff like that. So I'll be like, I'll just open the chart, check it, and maybe I'll just like, if I'm suspecting that it's about to form in so price point, I'll put a price alert there and I'm out of the chart. Then I'm only allowed to execute a trade between 8 to 4, like 8 a.m. to 4 p.m. West African time. Immediately the time passes 4 p.m. West African time, I already know that I cannot execute any trade again. I can only maybe if I have like an open position, I can only like manage the trade. You get, I can just manage the trade, like move my stop loss, like my trading stop loss and the rest. Question number 8, numbers of trade in a day. I wanted to use what was on my journal, and the exact words that are there is numbers of setup in a day. But I know that a lot of you like are not really like familiar with the word setup in the forex market and stuff like that. That's why I use numbers of trade in a day, but there are two different things. Number of setups in a day means that immediately you're looking at these rules, move your eyes to number 3. What is the parameter for which your initial setup will be validated? So let's go back to number 8 now, numbers of setup in a day. So what does that mean? That you can only look for number 3 once in a day. That's the meaning of number of setups in a day. Like immediately you see your setup validator, then you are now like waiting for your entry parameters to be ticked. Then you're just like waiting. Before you know, price just moved funny and it made the setup invalid. That means you're done for the day. That's why I trade. Like my current strategy, that's the way it is. If my setup just gets invalid, I know I'm done trading for the day. I'm not looking at the market for another setup. I don't want to even trade again that day. Like I'm off the market. But if you believe, because You would have the mindset that, oh, you need to be in the trades a lot to like make money out of it. Well, no, you would make the money and lose it back to the market. But if you can control yourself to limit the numbers of time you are like trading, you would end up that you would end up to find out that you are actually making money. You are still losing, but you are making money, and at the end of the day, you are getting paid. You are not losing everything to the market. Like in the month of January, I took 5 trades. Two, each stop loss. That means minus 2%. Two was in break even. That time I was not using trading stop loss parameters before. Two, each break even. Then I only made profit in one, and that profit was 5%. 5% minus 2%, that's 3%. I made 3% January. December time I made 19%. This February already, now I'm already like up 9% since on the like either 7th or the 8th of the month. Like, and it's funny enough, since that time I've not like seen any good trade yet, so I've not really like placed any trade. It's over like a week now. You get? So question number 9, trailing stop loss parameter. You heard when I said it. Trailing stop loss is one of the best thing that has ever happened to me. Remember I told you my risk to reward is 1 to 5. There was a time price moved 40 something pips in my favor. That means I had less than 5 pips to like eat my take profit. Then this price reversed back to eat my break even. That means I did not make any profit from the trade. I just like closed at zero balance. Like, it was really frustrating. That was the day I was like, I would never let this stuff happen to me. Then I started implementing like a trailing stop loss parameter. I first had to like define it before I like tried it in the chart. I tried it directly in the live market because I've already like tested the strategy. It's valid, so just have to like implement the trailing stop loss parameter. So let's move. Some forex strategy. Using our previously marked criteria, that means the criteria we like talked about, that 9 rules we just discussed about. Using our previously marked criteria, we would be constructing a strategy that you can make use of in your trading journey. Like we are about, like together, we're about to create a strategy from dust. A strategy that will protect your mental health, a strategy that will protect your psychology, a strategy that will make you trade like a guru. That's what we're about to unleash now. Now we're going to be working on our strategy. I was meant to just out of the blue show you like 2 strategies you can make use of, but instead I would want us to like work on it together, create just one, so that you would understand the concept and you'll be able to create others. So let's proceed. So first of all, if in regards to the 9 rules we made mention of, we discussed about previously, the first one, what type of analysis do you want to use? Definitely we're making use of technical analysis, like just the charts only and nothing more. Then question number 2, what type of trader style do you want to use? I'll be using the day trading. So we'll move on to question number 3. What is the parameter for which your initial setup will be validated? So let's make use of one of the patterns we talked about, like let's say like a double top and a double bottom. And let's just use this one here for this example. So I found our number 3 now. We can like you can write this stuff down. So this is the first bottom, this is the second bottom,
and this is the trend line. Let's mark out the trend line. This is the trend line. So we can see that this candlestick now breaks the trend line. That's for our number 3 now. So number 4, what is the parameter for which your entry can be validated? What is the parameter for which your entry can be validated? So we can say, okay, immediately it breaks and maybe another candlestick forms outside to simultaneously, after this one break, another one closed outside above the neckline. So we can say, okay, we would mark the candlestick that broke, and we'll go to like 5 minutes time frame. 5 minutes time frame. Now what are we going to look out for? I can say let's look out for the engulfing patterns, like the engulfing patterns, to validate our entry. We can still say, oh, that box we drew now is our like point of interest. So we can observe from here. Immediately the price broke, we mark this stuff, then it came down. See the first engulfing. Or this, we can even call this a tweezer bottom. One of the patterns I showed you. But if you don't want to use that one, you can use this engulfing here. So then this is our entry validator now. Engulfing candlestick pattern. So question number 5, what is the parameter for which your entry can be invalid? So let's delete this first. What will make this entry now invalid? Imagine the price went up, then it closed outside this box without forming without forming this engulfing. That means this whole setup has been invalid. You can set that rule yourself. You get. I remember I told you the strategy is just rules, and once you're setting those rules, it's good to like write them down to have it in your journal for future references. So if the price breaks this lower point of your point of interest, that means the setup is invalid. Then if price just kept on moving up without coming to your point of interest, that means the setup is invalid. So move on to number 6, stop loss and take profit points. Automatically I work with 10 pips stop loss, and if I'm trying a new strategy, I always try my best to start with 1 to 3. That means for each 10 pips I'm risking, I'm aiming for 30 pips. That's where I set my, if I'm testing a new strategy, that's the way I start it. Then after I'm done back testing with it, I'll top the take profit with 10 pips, that's 40 pips. Then I'll back test with it, then I'll compare the results. Whichever is higher, if the difference is not that much, I'm sticking with the 40 pips. Question number 7, what is your trading time frame? Write this down. Like for this strategy now, you saw what we use. I love using 15 minutes and 5 minutes. I don't look at any other chart apart from those 2 time frames. So automatically what we looked at in this chart, we do get our setup validator from the 15 minutes and our entry validator from the 5 minutes. Then we'll move on to question number 8, what is your trailing stop loss parameter? Immediately I enter a trade, I break even when price moves to 1 to 1. That means if I'm risking 10%, if I'm risking 10 pips for example, and price moves in my favor 10 pips, That means I'll move my stop loss to my entry. You get? Then if price, for this scenario now, if price moves to 20 pips, I lock in 10 pips. Then if price moves to 25 pips around here, I'll lock in 15 pips around here. So this one, the price went up, then it came back. I'll stick out. I've closed in profit also, stuff like that. So like I literally added this to my current strategy because there was a day, I use 1 to 5. There was a day price gave me, the market gave me 40 something, almost 50 pips, but it did not get to like 50 pips. I was waiting. Then out of nowhere, the market just retraced back to my entry. That's the way I ended that trade in a break even. It was really devastating. It affected my psychology. That's why I had to like devise a way to make sure that does not happen again. Number 9. Remember when we're talking about numbers of trades in a day, when I told you that no, that's not what I wanted, that instead replace it with numbers of setups in a day. Me, I work with one setup a day. That means the 15 minutes you identified the double bottom and you mark the neck of the double bottom, immediately this stuff gets invalidated. Maybe this entry did not play out, maybe the price went this way without any significant engulfing within our point of interest. Maybe price went downwards, that empty. That means I'm done trading for the day. If price was just going like up without looking down, maybe from here that we marked our point of interest, price was just going up without coming down, that means I'm not looking at any other thing in the market because I work with one setup in a day. So we just created a solid strategy, but with there are stages in deploying a strategy. First of all, you set your rules. That's number 1. Number 2, you backtest it. Like what we are doing now is backtesting. You backtest it. You go to your charts, see if you can identify it. Do it in a monthly basis. Like backtest this month, then learn execution by trading same strategy in a demo account but in a live market. You get? Then if you are satisfied with the results, you can deploy your strategy, like start using it in your live account. Thanks for coming this far. It means a lot. Enjoy your journey to consistency. Bye.
Why time is very important. Personally, I wanted to call the theme of this particular section, this section 3, I wanted to call the theme time as a concept. Knowing when you are to approach the market and when to avoid it
is very important. It helps in boosting the
feel of control. You know you can't control the market, so definitely you would have to control yourself. Like if you look at those 9 rules I gave to you, there's one thing that is common in all of them: time. Like you have to wait for each of those 9 criteria to be ticked before you can create that strategy. Time cannot be overemphasized. Like, don't be in a rush to I want to hit this target. You will end up losing everything. I keep on saying this. If you and a friend of yours trades on a separate account for a month, and that your friend made $1 and you lost $20, that your friend is profitable, but you are not. Maybe you grew your money to $180, then you now lost everything to $80. You're at loss. But that your friend that kept his account at break even at $100 is profitable. You did not lose to the market. You know immediately you place a trade, you're at loss. So if you haven't able to like end the trade in like with a little profit, that means you are very good. Time as a concept. Understand that once the strategy is good and you are doing what is in your journal, like you're following your rules very tightly, just trust me, you'll get to your goals. Like it's not impossible. You know it for a fact that as long as you keep on doing what you are meant to do, you'll be okay. You don't have to make 200% in a day or this to prove you're good. Consistently making 5% every month, you're a king. Get your time right. Don't be in a rush to do anything. It's better you trade with your rules and end the month with minus than for you to trade carelessly and end the month with a plus, because you would pay times 3 of what you gained. It sounds funny, right? But that's the reality. You pay dearly for wasting your time. You pay dearly for trading carelessly. This is just like the secrets to success. Your timing and your hard work will give you the bag. Your timing and your hard work. Like hard work is on its own way, then time is on its own way. Like your timing and your hard work will give you your results. Now we move to the key to consistency. Everyone wants to be consistent in what they do, but it all drives down to how bad you want it. But me personally, I have found some attributes that encourages me to keep showing up and repeating the same process every day like an automated machine. Everybody wants to be consistent, but the possibility for you to be consistent depends solely on you. You'll be the one to be like, oh, I have to put in the work every day. Oh, I have to have like good self-control every day. So showing up every day means that even the days you are not comfortable, you are coming up. You must show up. And immediately you are showing up even when you are displeased to show up. That means eventually you would see results. Consistency is the key. It might be difficult initially. You'll be trying, you'll be like, oh, this is almost impossible. Give yourself some break. Then come back at it. As you mean what you are chasing is not really like that important, you would not be chasing it. You know the reason why you are here. You know the reason why you decide to trade. You know the life you are chasing for. So you would have to pay the price for it. Your hard work and your timing, stay consistent to it. And some of my attributes that I found, let's talk about them. Some of my secrets to consistency. Master your time. I keep on saying time. You might be like, oh, you're in a rush. Remember, throughout last year you were in a rush. Throughout last year you're like, oh, let me trade $1 million and stuff like that. You are at rush, but you are not moving. It's better you calm down and move. So let's talk about number 2. Make use of a simplified strategy. I showed you an example of one. Simplified means easy. It's easy to spot and it helps to like control every aspect of trading for you, from your psychology to your timing to your like self-control and everything. Like this strategy, the one we created, that's 9 rules strategy formation. It's like it's an all-round strategy. It holds you. You just have to like stick to the rules. So we'll move on to number 3. Make use of a good risk to reward. Yeah, I keep on saying it. Whenever I'm trying to like develop a strategy, I always start with 1 to 3. I don't even like 1 to 2. I start with 1 to 3 weeks to reward. In case I lose one, in case I win 1 trade, I know I would have to lose 3 trades to be at break even. Then in case I lose 2 trades, I know I just need to win 1 trade to be at a profit of 1%. You get? So that's just it. So number 4, start documenting. You only notice all these differences. Remember the way I was talking about compare strategy, take profit? You would only be able to understand the gap where you are missing it if you document. It might not even be like written. You might be like have like a mental documentation, like it will be in your head. But to be like on the safer side, it's better you write it down, because immediately you forget that stuff from your head, it's gone. But if you write it down, whenever you open that your journal to just look at it, you'll see it there. You'll see your thought process and everything. Like, try to document. You are called a technical analyst for a reason. What's the work of an analyst? To check data and make sense out of it. Now you have to record your data and try to make sense out of it. So we'll move on to number 5. Get busy and keep your itchy fingers off the chart. Like, I believe I don't need to explain this one. Like, get busy with your life. Don't be like, oh, I'm a Forex trader, then you sit watching the charts all day. Like, you are not going to help yourself that way. Like, that's one of the surest way to destruction, because you will definitely get bored. Just get busy. Don't be looking at the chart always. Don't be looking. Learn how to use like alert system for trading view. Like, keep your face out of the chart. Don't be on. Like, imagine somebody's trying to kill you and you're going to meet the person every time. Eventually it will happen someday. You get. But if you respect yourself where that person is, whenever you are around that person, you have like your self-control and everything. You'll see that person can really help you. Get busy. It would really help you. Okay, as usual, our quiz on Telegram. As always, I created a short evaluation on Telegram. I want you all to test what you have learned so far. Wishing you all the best. When you are done taking your quiz, try to like screenshot it and send to me in my DM. Wishing you all the best in the Forex life. Have a nice Forex journey, and don't hesitate to reach out to me if you're facing difficulties. The end.